If you are looking for personal loans this year, SoFi and Prosper can be two candidates for you, especially if you want to get a large loan amounts. Okay, for SoFi, for instance, you are looking at a maximum loan amount of $100,000, whereas Prosper actually is setting you at a maximum of 50 grand, but still good anyway. Okay, so here's an overview I want you to pay attention to. If you think about SoFi and Prosper, I want you to think about solid lenders. Okay, they'll take care of you real fast. You have a pre-qualification process. You are able to be funded within 24 to 48 hours, so 1 to 2 days. The only thing is SoFi actually is slightly better in the sense that SoFi will give you a maximum loan amount of $100,000. Actually, the loan amounts goes from 5,000 to $100,000, payable over 2 to 7 years, so 24 to 84 months. And if you go to Prosper, you are looking at 2,000 to 50 grand, and payable over 24 to 60 months. So the repayment window is shorter. Okay, and the only thing is that with SoFi, you do not have origination fees, which you do with Prosper. Prosper is charging you somewhere from 1% to 10% in origination fees, whereas SoFi is not charging you anything in terms of fees, but they make money off of you otherwise anyway. Okay, and one thing I want you to really understand also is that SoFi is actually, SoFi stands for, let's see, social financing. So basically, they have a more different approach when it comes to qualification. And one thing I want to say also is that whether you go with SoFi or Prosper, just make sure that you are able to afford the monthly the repayment amount. That way, you do not actually, let's say, have like you do not want to really put your cash flow in the right in the red. I mean, you do not want to have a negative cash flow. Okay, and also make sure that you have a bank account, because SoFi or Prosper will want you to link a business. I mean, not a business, a personal checking account or a savings account to your loan so that they can send you the money. So that's really important. So let me first talk to you about the SoFi, the kind of loans that you have with SoFi, and then I'll speak about what you get with Prosper. So if you think about SoFi versus Prosper, keep in mind that SoFi, actually, I think I've said this before, but SoFi is really specialized in large loans. Okay, SoFi as Prosper, they are both fintechs, but SoFi actually has more products. So beyond personal loans, SoFi has they have all kinds of products. Okay, so one thing I want to say here is that SoFi started as a lender focused on students, but today they offer loans to a much wider group of customers. And so SoFi is known for being a popular lender for people with good credit, but short credit histories. But hey, listen, even if you have a bad credit or fair credit, you can still qualify for a SoFi personal loan. Okay, you can even work with a company to handle both your banking and investing in one place. And if you already have, let's say, student loans from SoFi or use it for its other services, it can make your life a lot easier to keep all your money in one place. So think about SoFi as your all-in-one solution. Okay. For example, you have a option for additional fees for its loans, meaning you could opt for a higher monthly payment if needed, especially if you're trying to really pay the amount real fast. So, what are the pros and cons of SoFi versus Prosper? Let me talk about SoFi. With SoFi, you have a high loan maximum. Remember, $100,000. Not a lot of lenders actually give you $100,000 maximum. You have Lightstream, you have SoFi, you have Wells Fargo, but you don't have a lot on the market because that's a huge amount. Okay, so if you can qualify with limited credit history, so that's kind of cool, and you also have more flexible loan terms. On the flip side, with SoFi, you do have a higher APR. So basically, they'll give you a good loan amount, but hey, listen, they'll charge you for it too. And it takes more time to get funded, especially if you are looking for a large loan amount. And you must borrow at least $5,000. So the minimum with SoFi is $5,000. For some borrowers, that's good, but for others, that's not really good. So you have to see what works for you. Let me talk to you now about Prosper. So, what should you really remember as Prosper? I mean, when it comes to Prosper personal loans, Prosper actually is an online peer-to-peer lending marketplace. So you can see that right off the bat, the business model is a little different. Both are fintechs though, but SoFi is not a lending marketplace. So basically, on Prosper, for instance, your loans are funded by individual investors. On SoFi, basically, your loans are funded by SoFi itself or its lending partners. Okay. So Prosper is an online peer to peer lending marketplace. That means what? It means when you apply for a loan through Prosper, it will be funded by either individuals or businesses that want to invest in personal loans. Okay, but the cool thing is it has its pros and cons. This model has its pros and cons depending on what you're looking for. So basically, a Prosper accepts borrowers with lower credit scores, but has more stringent requirements when it comes to the number of other loans you have applied for and your existing debt amounts. So this is one thing you have to really be comfortable with, especially when it comes to the the cost it will take, the cost you will have to incur to actually get a loan through Prosper. Okay, so one drawback, and this is a big one, one drawback of Prosper is the unavoidable origination fee. So the origination fee is how the platform actually pays itself, because the platform is not. I mean, they're not issuing loans, so they have to exist too, right? So they are actually charging an origination fee, but this origination fee adds to the cost of your loan. And Prosper actually also has a lower loan maximum than SoFi, making it better for borrowers looking for, let's say, a smaller loan. If you're looking for a smaller loan, go to a Prosper. So, what are the pros and cons when it comes to Prosper here? The pros: you have a lower loan minimum, lower minimum credit score, and you also have a next day funding. On the flip side, with Prosper, you have less flexible loan terms. You have origination fees, okay, again, maximum 10%, and you also have stricter requirements regarding existing that you can have. So let me talk to you about the selection here. If you think about SoFi versus Prosper personal loans, you want to really pay attention to a few criteria to actually choose either or. First of all, you want to look at the APR range. So both Prosper and SoFi have the same starting rate of 8.99%. But this APR, you're not gonna get it unless you have a strong credit. Okay, if you have poor credit or fair credit, you're not gonna qualify for an APR of 8.99%. You probably will get something in double digits. Okay, 20% or 24%. Okay, so Prosper does have a higher maximum rate than SoFi's, 35.99%, which is actually the legal maximum when it comes to rates. Okay, compared so 35.99, that's actually the Prosper rate compared to SoFi, which actually caps you at 24.49%. So again, Prosper is the online marketplace, the peer to peer. Okay, so if you have excellent credit or even good credit, you may qualify for the lowest rate from both lenders, but SoFi may be more affordable if you have poor credit because of its lower maximum APR. So SoFi, if you do qualify, if they approve your loan, thinking that you are getting a maximum of 24.49%, it's really good. What about the minimum credit score? So in terms of approvability, in terms of approval odds, Prosper approves borrowers with lower credit scores than SoFi. So if you find yourself struggling to qualify with SoFi, you may still have a chance of getting approved by Prosper. Plus, you can borrow less, which will allow you to build your credit history and secure better rates in the future. Just be aware that you are going to actually, I mean, if you go with Prosper, you have to really cope with the 35.99% maximum rate, which is really higher than SoFi's 24.49%. But hey, listen, it is what it is. You also have to pay attention to the repayment terms. Okay, now SoFi is more flexible in its terms and conditions than Prosper. offering loans that range from 24 to 84 months. And that makes sense because, I mean, they're giving you that much money, $5,000 to $100,000. They are allowing you to really extend the repayment window to a maximum 7 years as opposed to 5 years. If you think about 24 to 84 months on the SoFi, side of things, and compare that to Prosper, which offers you a 24 to 60 months, you can see a big delta there. Okay, there is a big difference. 24 months and 24 months can be a lot, especially if you have to make $1,000 monthly payments. You know, so Prosper 24 to 60 months, SoFi 24 to 84 months. So both actually starts you at 2 years, and they end you somewhere between 2 and 7 years, 2 and 5 years. That means that SoFi, for instance, gives you more control over your monthly payments, allowing you to pick the term that is right for you. What about the loan amounts? Well, the loan amounts, I mean, if you've been listening to me since the beginning, you know that SoFi is the better option here in terms of maximum loan amounts. But when it comes to minimum loan amounts, Prosper is the better lender. Why? Because Prosper is giving you a minimum loan amount of $2,000, is allowing you to borrow as low as $2,000, whereas SoFi is only giving you a minimum loan amount of $5,000. So if you don't need $5,000, for instance, you are forced to borrow that much, okay, through SoFi. So if you need a low minimum amount, go with Prosper. And one thing I want to say also is that basically, the more you borrow, the more additional interest. I mean, the more interest you have to pay. So you got to really ask yourself whether you want a high loan amount or you want a low minimum amount. What about the fees here? Well, SoFi really wins here because it has optional fees for its loans. You can opt for an origination fee for a lower APR, but you're not required to choose it. There are also no prepayment penalties or late fees required on your loan. Prosper, on the other hand, charges an origination fee that reaches like 10% maximum. That's really high, 10%, and may also charge late fees if you fail to make an on-time payment. So the bottom line here is that when it comes to a SoFi versus Prosper personal loans, you got to really ask yourself what kind of lender you want to opt for. Are you looking for, let's say, a direct lender, or are you looking for a peer-to-peer marketplace? If you want to go for a direct lender, then go for a SoFi. If you are looking for a peer-to-peer marketplace, go for Prosper. Okay. The thing is that if you think about Prosper, I want you to think about the fact that you are getting things done fast. Okay. I mean, SoFi can be seen as a peer-to-peer lender also, but the thing is with SoFi is that you have more products and services. SoFi really wants to revolutionize how you think about your banking services. They want you to really consider their company as an all-in-one service. In other words, you can get checking accounts, savings accounts, credit cards, and all that kind of stuff through SoFi. You can say that SoFi is more quote-unquote ambitious in its business model, in executing its business model, than Prosper. Maybe Prosper in a couple of years will be at the same level that SoFi really is, okay? So what you want to do is that whether you have to choose between those SoFi or Prosper, you always want to pay attention to the loan amount that you're looking for, the minimum loan amount that you want, right? You also have to think about the APR range, the credit score requirements, the repayment terms, the fees also. One thing I want to say also is that pay attention to pre-qualifying. Luckily, both SoFi and Prosper allow you to pre-qualify for a loan, so you don't have to really risk a hard pull right away. You can go through a soft pull and see how much you could potentially qualify for. So if you like the offer they give you after going through the soft pull, then you can go ahead and just apply for real, okay? But you always want to start with a soft pull. And again, I don't care how the economy is going, whether you have an up economy or a down economy, or you have a good credit or bad credit. You always want to choose a soft pull whenever possible. So the bottom line is the lender that's better really will depend on a couple of things, okay? And those two, there is not one clear winner. So if you were to compare and contrast SoFi and Prosper, there is no clear winner. You really have to understand that each has its pros and cons. And the bottom line here is that you have to really think about what matters to you. If you really want to have a high loan amount, if you really want to have a high loan amount, and you don't care about the time it takes to fund, go with SoFi. SoFi will give you a maximum loan amount of $100,000, but it takes days, literally days, for the loan to be funded. So you might have to wait 3, 4, or 5 days. But hey, listen, if you're asking for that much, it wouldn't really kill you to wait a couple of days, okay? But if you are looking for a relatively lower loan amount and you want to be funded real fast, go with Prosper. Prosper will give you a maximum loan amount of $50,000, but they will fund you within 24 to 48 hours. Simply because they do have this peer-to-peer marketplace where they're not really dispersing the funds from their own coffers, but they're actually reaching out to investors to actually fund your loan. Okay, and so both Prosper and SoFi can be good options for personal loans. One thing you need to understand is that if you want to borrow a smaller amount, consider Prosper. For less fees and potentially lower rates, consider SoFi. And since both offer pre-qualification, you may be able to check your potential terms and conditions and choose the lender that has the better deal before you actually sign on the dotted line. Okay. What I want to say also is that when it comes to loans in general, whether you go with SoFi or Prosper, remember that the paperwork you have to submit when it comes to the application itself also plays an important role. They might ask you for your tax returns for the last 3 years. They might ask you for bank statements. They might ask you for proof of employment. And but so those are the criteria that will differentiate whether you should go for one option over another. One thing I want to say here is that if you pay attention a lot to things like employment proof, like proof of employment, you have to see that there is an element of flexibility. Like one lender will be flexible than the other. So Prosper actually is less is a more no Prosper is more flexible than SoFi when it comes to proof of employment. But most importantly, the amount you have to make. So, but it's not really uncommon to have requirements where they're asking you to make at least $1,000 every single month. Now, one thing for sure, remember that those both SoFi and Prosper, are both fintechs. They are online lenders. So if you want to really go to a branch, if you like a bank or like working with a bank or credit union, just choose a city, for instance. City is giving you a maximum loan amount of $30,000. PNC is giving you a 25 grand. US Bank is giving you a 30 to 45 grand. So you don't have to go to Wells Fargo, which gives you a $100,000. You can go to those regional banks, or you can even go to TD. TD Bank is giving you a maximum of $50,000. Or if you don't like banks, you can go with credit unions. You can use a credit union such as PenFed, which is giving you a maximum loan amount of $50,000. And so you do have options. That's the bottom line here. In conclusion, today's conversation, I spoke to you about SoFi versus Prosper. I gave you the overview, the selection, the bottom line. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.